Hi, welcome to the video, and today I'm going to actually walk you through a live trade. I'm going to sell a put on coin. Today coin is down just about 2%, and I think there's a good trading opportunity. First, I'm going to place the trade, and then I'm going to walk you through why I am trading this and my general trading strategy. It's actually pretty simple. So here, this is where we order options just via the TD Ameritrade website. Type in coin here, one contract, expiration date August 26th. I generally like to sell puts a little over a month out. So this is just about 45 days out. We select put. Here we can look at the bid and the ask for this strike price. Coin is currently hovering around 248. You can see it's down about 2% of the day. At its lowest, it was about negative 2.35. Now, whenever you see it hits a low and it bounces back up, the chances that it's going to hit this low again is actually really quite high. So whatever the bid and ask spread is here, I generally want to lean towards the ask for sure. The ask is basically if I can get it towards the ask, I'm making more premium. So buyers of the put want to buy it for cheap. They want to buy it for $15.30 per share, and an options contract has 100 shares. So this would be $1,500 if you wanted to buy this put, and $1,700 if we want to sell. So we are sellers, so we want to get the highest price we can per share. And let's look at this strike price 247. I actually don't want to do that. I will basically just refer to Robinhood a lot because it's still one of the most easiest to look at UIs. So here is where the current share price is at, and I want to sell a put, I think 237 or 240. And the reason I want to sell it around there is if we pull out, every time Coinbase comes down, it's dipped as low as the 220s, and it'll hit 240 and then it'll come back down. But recently it broke that 240 mark. So 240 in the past was kind of a ceiling. But now once it breaks the ceiling, you can see that there's some tension around here. So my guess is that in the next coming month, if it hits 240 again, it's probably going to bounce a little bit. And even if it goes under, it's okay because Coinbase is a company that I'm long-term very bullish on, and I really like. So that's actually one of the key parts of my strategy is I only sell puts on companies I really like. This lets me sleep at night, not at knife. If this tanks, if the stock tanks, because I believe in the company and I've done enough due diligence that long term I still think it'll go up, that's okay. That's my worst case scenario, that I buy 100 shares of coin slightly above market value. But because I sold a put, you can see my break even is actually a lot lower, because if I sold a put at this strike price, I'm getting all this premium over $1,000, and I get to keep that. And essentially, if on expiration date, coin is below my strike price, sure, I would have to buy it for 237.5, but because I got this premium, essentially my price is 225.9 per share, and I think that's a totally fair price, and I'd be happy to own this and just hold it for the long term. At that point, I'd probably still start selling calls as well. So okay, now actually get to buying. I'm actually talking a lot. It's actually hard to buy and talk at the same time. So what is going to be my strike price? I think I'm gonna do 240. I'm gonna be a little bit aggressive. My thesis is that in a month and a half, crypto is going to go up a little bit because there's a conference coming with Elon and Kathy and the CEO of PayPal. I forget his name all of a sudden. But that's my thesis. If upon a month from now, the strike price is above that, I'll get to keep all my premium. If it really falls below, like I said before, I'll just either I can let it get assigned and I'll just buy the stock, or I can roll it, and that's for a separate video. But essentially, I close my current position and I open a new one, a month or 2 months out. So here you can see the bid ask price is about here. This is the last time that a sale was made. That was the price. So these are good reference points. When you're selling puts, I think you always should be a little bit greedier. So you can add these two. which would be, and divided by 2 to find the perfect, the midpoint. Whatever the midpoint is between this will be your best chance of getting filled. But if we look at this graph, yeah, I think it could come a little bit lower. And once it comes a little bit lower, we can get an even better price. So I'm going to be a little bit aggressive. And, you know, the average 15.2 divided by 2 would be 12.6. That's the average. But let's do 12.65. Or, you know, let's do 12.7. I'm going to go back to the graph. Here the RSI is just looking at the general, just how much buying pressure there is. It's a little bit lower near the 40s. If it's high here, that means there's too much buying. If it's low here, that means there might be a little bit too much selling. But this is still hovering around the middle, so that's not really the best indicator. I think I'll do, yeah, 12.7 seems good to me. Okay, let's just review order and place order, and it instantly filled. That was super fast, and I was not expecting that. I'm gonna go to my positions. So here you can see all my positions, and I'm actually down $5 because the actual price was 12.75. And I'm gonna be honest, I was not as greedy as I should have been, but hindsight's 2020. The reason I opened this put, even though you can see that we're not at record lows, that would be optimal if I actually just waited for it to hit a low of 225. I think there's a good chance it'll hit it again. So why am I selling a put right now when it's not even at the lowest I think it would be, you know, within a month? And the reason is we can't really predict the future. And this goes back to my specific strategy. This is what works for me. I have a lot of stuff to do in my life. I can't always be tracking the exact movements in every single piece of news that comes out for all the stocks that I'm invested in. But there are a handful of stocks, like I said, that I'm super bullish on. So I am okay with getting optimal entry points as long as it gives me exposure to this stock. So because I'm bullish on coin, I always generally want to have one put open on it because I believe it is low-ish, and at some point, because I'm very bullish on crypto, it's going to come up a lot. And so far, that's worked fairly well for me. And the current coin position is closing July 2nd, which is tomorrow. And I'm actually probably going to get this full premium, which is over $1,000, $1,500. I'm essentially just rolling this because I'm taking profit on this coin position tomorrow, and I have another one open. So in case coin shoots up 20, 30 bucks, I will have this exposure always. That's always what I want to prepare for. That's why I also have a bunch of Tesla puts or 2 Tesla puts. I always want to have at least 1 Tesla put because it's another company I'm super bullish on. And the key thing about this type of strategy is that it's kind of lazy. I'm not getting the optimal entry points, but I've preloaded a lot of my work because the work has been the research into these companies and the conviction to hold it, the conviction to sell a put. Because if you sell a put on a company that you don't know much about, and let's say it drops 50% in one day, what are you going to do? Are you going to hold it, or are you going to panic buy to close that position? For stocks like Tesla and coin, I've done enough research that my conviction is so high that no matter how much the stock price drops, that's not really going to change my position. Now, that does not mean if the company fails at something, if Q1 earnings are bad, if deliveries are off, if something actually is fundamentally changed or wrong with the company, or they made a big mistake, that will definitely change my strategy and how I approach investing in it. But if it's just stock price movement is not the company. I'm going to repeat that again. Stock price movement is not the company. You see so many people panicking when stock price is going up and down, but that is oftentimes irrelevant, because if you truly understand a company, all you should really care about is how much money they're making, whether their leadership is good or not. And that doesn't change nearly as fast and as often as the stock price. So that's basically it. it filled, and we could update every once in a while and see how it's doing. And it's down 45 bucks. So clearly my entry was very, very suboptimal. And this will always happen. You can't catch the perfect lows. You can't catch the perfect highs. I probably should have been a little bit patient. You can see a lot of red, and that's something you just have to get used to. But I can show you my year-to-date profit, and I trade primarily growth stocks. So it was a very, very bloody couple of months when all growth stocks collapsed. But I'm still up $30,000. So I kind of know what I'm talking about, in that I've made a lot of trades, hundreds of trades this year. Last year I was also profitable, just about 30 grand. This year we'll see what happened. During the very, very bloody couple of months, I lost so much of my gains. I'm just very grateful to still be up. Hopefully the latter half of this year I can do better and make up a lot of the lost ground. Yeah, that's basically it. Let me know what you think about my strategy, or let me know what your strategy is. I hope this was helpful. Please consider liking and subscribing. This is Green Knight Trading, where squires become knights. Thank you all so much for watching. I appreciate you, and I'll see you soon.